Hi guys, welcome back to another video. Today we'll be doing an analysis on Visa. So as always, I want to start off with their PE ratio. So the current PE ratio is at a 35.48, which is not the best, as you ideally want to see the PE be at least 20 or less. This is something important to look at because it shows you how risky the investment can be. So they currently offer a dividend yield of 0.76%, which does equate to about 38 cents per share, which isn't too bad. It's always nice to see a company give back to its investors, even if it's a little bit. Moving into the income statement now, I want to take a look at their revenue. So as of the most recent year, they're bringing in 24.11 billion in revenue, which is up almost 6 billion from 5 years ago. So this is great to see that there is still plenty of room for this company to grow. They did have a little dip in 2020, but we all know what was going on in the world at this time, so I'll give them a break for that. Now, getting into the net income, this also looks really good. They've managed to improve on this every year and are up 90% since 2016. Again, they had the dip in 2020, but I'm not going to criticize them for it. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. So as you can see, they've been handling this so well as every year has been decreasing so far. Now moving into the balance sheet, let's take a look at their current assets. So their current assets are looking good as they've grown to 27.61 billion, which is an increase of 45% from 5 years ago. The most recent year they have dipped zero point zero 0.04, but this isn't a big enough decrease to have me worried. Next, I want to look at their current liabilities. So as of 2021, they are at 15.74 billion. So this is great to see as they have 11.87 more current assets than current liabilities. Also remember this number, 15.74. So if we scroll up and look at their cash, they have 17.38 billion, which means they can pay off any current liability at moment's notice, which is always a nice bonus to see. The last and one of the most important aspects to look at in any company is the free cash flow. So as you can see, it's really good. It's always a good first sign to see that the cash flow is positive. It's even better to see that it's growing as it currently stands at 14.52 billion from the 8.5 billion 5 years ago. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. In conclusion, Visa has some really good looking financials. The only criticism I have is they have a high PE ratio, but this isn't really their fault. All this means is the company is overbought by investors right now. Other than that, I like what I'm seeing from this company. Their income, balance sheet, and cash flow statements are basically perfect. When considering buying this company, I would probably buy a little every week or so as it continues to keep dropping. This will allow for you to have potentially a really good average price with the shares you bought. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.